Okay, so now you see it was in the bearish trend till it reached right here. So it was in bearish trend till it reached right here, and it made this, okay, it made this higher low. Okay, then after making that higher low, you can see this higher low was broken, right? And after breaking this higher low, now always what we do, we always look for liquidity, where will the market come back and sweep the liquidity before we taking any trade, right? So now when you see this low that made the break of the other higher low, it was here. This was the low right here. So always we have to wait for this low to be swept, okay? And actually it might not create a new lower low, right? But it has to sweep it with a candlestick, right? Not a full body candlestick, rather with a wick, okay? As you can see right here. So now it just swept it with a wick. It left this wick right here, okay? So now this is the wick it left, okay? But when you go to your lower time frame, like 1 hour or a 15-minute time frame right here, okay, you will see that one it actually closed with full body candles. But that's why we always not considering this lower time frame for this one. We always have to wait for the sweep of liquidity, okay, on the higher time frame. Okay, for example, H4. When you see H4, you've seen H4 that yes, it left a very big wick, okay? So now after that, immediately after that, after sweeping liquidity from down, that's when we shall always go to the lower time frame to get entry, because now it has come back after sweeping. Those ones that actually take risk entry, they would enter immediately after this sweep, after this candle closing above this low. After this candle closing above this low, yes, someone can enter, okay, immediately, and the target's right here, okay, almost 120 pips, right? And you risk just 20 pips, 1 to 5, okay? Or you can even target somewhere here, okay, almost 200 pips. But also to minimize your stop loss, you can go to your lower time frame. You can go either on 5-minute time frame or a 15-minute time frame, right? So now when you reach on 15-minute time frame, what you do always, so you can see this sweep of liquidity, this arrow where it is pointing, okay, that's where the sweep of liquidity is. So now always we'll have to wait for some bullish confirmations or bullish momentum. You can see after the sweep on our H4 time frame, you can see consecutive bullish candles that were formed here, right? So now you can see right here there is this bullish candle right here, this bullish candle, and I will always consider this one, this bullish engulfing candlestick pattern, okay? This bullish engulfing candle, it engulfed this bearish candle. You see, it was very big. So now this one, it was a very good confirmation to tell me that yes, we are bullish after the other sweep of liquidity, right? So now after getting that confirmation, I would just confidently come and enter my market, right? I would confidently enter my market from there, okay? From there, then yes, you know, the stop loss always below this. Then you can put your TP right here, or you can put it right there. You can see that the trade moved very good after sweeping that liquidity, okay? So now it works on all the pairs. When you follow it on all the pairs, it can really work. So thank you for watching, guys. Let's meet in the next video.